Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
Welcome to Saturday. Welcome to the 13th. Everybody's not favorite number on the elevator list, right? So let's do a quick check, if I may, please. The Q&A window is open for questions. Chat window, if you would, please, to double check sound and screen sharing. Let's take a look at that. Make sure we got everything shared correctly. I think sound should be pretty good, right? Yeah. All right. So, welcome. And let's talk about the markets. Let's talk about what's going on in Forex. Let's talk about, I don't know, all kinds of crazy things. But do me a favor, if you could, please feel free to ask questions. Type them in the Q&A window. Don't type them in the chat window unless you want everybody else to see it, which is cool. So I'm actually going to post something in the right now because I thought this was great. Everybody's probably getting so sick of, hey, where's all the links to the Telegram channels? So Stefan, which some people call me, I am Steven though, has built an entire list for us. It's awesome. So all the recordings, all the links, and honestly, every single subscriber at this company should have this bookmarked on their phone, their tablets, whatever you guys are using, because everything's right here. Now, in all fairness, some of this stuff is we got to change some of the links to it because, we're trying to get AP Academy all sort of straightened out and then putting the rest of some of those pieces live. But this is actually a good start. So if you guys obviously want to make sure you always subscribe regardless to the official channel, which is this main one here, and then the affiliate as well. That's myself. And then whatever software or all. Just keep in mind, if you subscribe to any of these channels, you're going to want to make sure, if you don't want your phone or whatever device dinging away all week long, as you turn off the notifications or just silence them, whatever, makes it a little more palatable. Because, one thing that's great about the Arrow chat room is that this is just a super community of, just a lot of stuff going on. But important to follow all this. We've had disruptions with our VPS, which has been unrelated to Auvoria. It has, I would say, in maybe 65, 70% of the cases, it's been related to the VPS company we've upgraded. So that hopefully will alleviate some problems. And, some of this stuff, unfortunately, is it's I don't know. It's tough to sort of navigate through the waters when you're not quite sure, how good your boat is in 12-foot swells on the ocean, right? So trust me, I've been in some 12-foot swells. It's crazy. But looking at that, this is essentially all the links. That's cool. I want to make sure everybody also notes that this is the Auvoria Academy. So if you just log in AuvoriaPrime.com, you click on AP Academy, it takes you to this page. You're going to need to go through these steps here first before it lights up the rest of this. But I would make sure to have all of your team members, whether they are experts in Forex or not. I thought I was an expert, and then I learned a whole bunch of stuff when I went into Forex Basics. So make sure between these two that you communicate this to your up and down line, because 95% of the problems that are untech related at this company come from the fact that students and subscribers have not been through this process. So again, my role, right? Risk manager, make sure your team goes through it. I even learned some really good stuff from Adaze. She did an excellent job. So we're going to be making some changes to some of this, and just bear with us as we get everything all smoothed out coming up on our 1-year anniversary as a company. So let's talk about Forex. I have the forexfactory.com screen up. Note that I always take out orange and yellow folder events. I don't care about smaller events. I only care about a red folder, which have high impact to currency, equity, and credit markets globally, commodity as well, depending on it. Do note, okay, we have the G7 meetings Friday. I have no idea what's going to come out of this. Personally, I'm not going to be trading Friday in anything. I actually have a bunch of client meetings set up. I don't know what's going to happen. I don't know if anybody's going to talk. I don't know if he's going to open their mouth to some Bloomberg person that's been hiding out on the sidelines. I just don't know. So I think it's important that I'm not trading Friday, period. So just note that. It is a bank holiday for, actually, you know what? Let me just, I tell you, this is a great example, by the way. Let me just go back to the previous date. This is a great example why you always got to check the damn date because you're talking on the previous week, right? So going forward, and I'll tell you, for what it's worth, these G7 meetings, anytime these pop up, which were last Friday, I was out with meeting with clients. I wasn't trading, but anytime something like this pops up, you want to make sure you note what's going on. Because a lot of times this is not canned. There's not a presentation. There's not notes released on it. But always want to make sure, just like the mistake I made, you look at the week going forward. Okay, so we have stuff going on Wednesday, both U.S. dollar, Aussie related, Euro related, right? A lot of PMI reports coming out of Euroland. Note this, this is almost like another one of those treacherous type Fridays, right? There's a reason why historically win rates, regardless of whether you're manually trading or trading with some sort of automation, have lower win rates essentially during that period of time because big news events come out. So there's a reason we always try and steer clear of that. But we've got holidays for much of Chinese markets. Obviously, the holiday we have with President's Day coming up. You guys can always click on any of these folders if you want to find out what the holidays are. This looks like Spring Festival, which I'm not aware of. But there's a lot of bank holidays coming up next week. And then for the U.S., we've got President's Day. What else I want to say? Let me just make sure we're sharing the right screen here. Okay, good. Sometimes I'm motoring ahead of myself and I'm not checking on dates and screens because I'm in the zone, but I'm talking about the wrong week. So go to the charts. All right. S&P all-time highs for those trading or owning of funds or stocks relating to U.S. equity land. Still getting quite bubblicious, right? Although everybody's still saying there's a big correction coming. So typically when you have what's called that wall of worry, that's continuing just to fuel the move. Obviously, there's tons of money coming, as we call it, helicopter cash from multiple central banks that are coming around the globe, falling down upon primary dealer accounts, thus lifting most boats, including real estate equities, even though many economies are in shambles. That's why you don't fight the train, if you will, of any central bank that has serious power, like the ECB or Federal Reserve here in the U.S. Dollar. Let's take a look at that first. So see if I can make this a little larger here. So this is U.S. dollar daily chart is where I usually like to start my analysis off for those that are fairly new, because we've had, get this, 1,000 subscribers in the last week join Auvoria, which is bananas numbers. So I feel the pressure more and more to get it right for the team, right? But in any case, we have been in a balancing period since the 2nd of December, when we broke down into this lower range that we've been balancing in for 2.5 months, right? And during that period of time, these support and resistance line, this line used to be a little lower right here, but essentially it was like right around here, but it popped up a wee bit, expecting a broader range to stretch out. That's kind of what happened. Notice how the 50 SMA, which is what this green line is here, 50 SMA is holding us. We've had 3 dojis. This one arguably a hammer reversal, albeit not all that strong of a candle pattern. But 2 previous made an attempt, typically after a doji, any kind of candle that looks like this, where it has a very thin body, regardless of the extension, if you will, the wicks either upper or lower, has a thin body, is what's called an indecision day. And this can be a tell for any market, whether it be commodities, credit, equities, in terms of what's going on. So that led to probably a boost off the 50-day, and it pulled right back to it. So what do you take from this, and what does that mean going forward? It's tough to call. Lines holding. I would probably say that unless something that is just ridiculously devaluing, which has pretty much been the whole last 12 months in many developed countries, right? Anything that's just ridiculously devaluing, I think we'd probably go back up and test the high. But we are coming out with additional stimulus, I think. If the idiots in Washington can get together on both sides on this, we probably are going to stay in this range until we get some sort of definitive move one way or the other in terms of a signaling from the Fed. There's a lot of grumblings last week about a lot of stuff, whether it be crypto related or the news that some organizations like MasterCard and Visa, may start to look to accept crypto. I don't know how much of an impact this is truly having on Forex markets, other than just continuing to make clear waters murkier from an analysis a risk management standpoint. I don't put much into that until a lot of central banks start saying things like, yeah, well, we're implementing Bitcoin tomorrow, right? And then I start to look up above that and pay more attention to it. But for right now, it's just rumors. Most of the crap you guys hear on television is mostly just rumors. And don't fall for a lot of stuff, because most of the so-called gurus that come on television that run like serious books, whether it's some hedge fund guy or John Mutual Fund this or Frank ETF that, right? They're talking up their book, okay? So always be suspect. From a risk management standpoint, I don't put a lot of effort into that. Now, there are certain people I follow on Twitter that really aren't necessarily out there constantly talking up their book, trying to make their own investments look better by convincing Wall Street that the opposite is true, while they're selling into the strength or weakness, right? So it's always a shadow game, as I tell people. Don't hang in every word these people say, unless somebody like a David Tepper's coming on, or Jeffrey Gundlach, Double Line Capital. You guys hear me talk a lot about them. They're one of the best credit hedge funds in the country. They're actually right here in LA. They're a quality shop, and he is a very generous billionaire, and he doesn't need to play all the Elon Musk games. So I always tell clients and certainly subscribers here and some of my students that when you're walking down that path of financial independence, there's going to be a lot of people throwing stuff at you. Buy our newsletter, this, and use it from an educational standpoint, just like everything I talk about, everything I've done in the past webinars. I try not to steer anybody towards any particular myopic focus, right? Like a horse running down the track. But I love that analogy, because when you're running down the track and you're laser zone focused, right? Just like an international sports professional, I looked at some of the women in tennis as an example. Internationally, their focus is just some of the best I've ever seen. Some of the professional skier women as well. Their focus is just laser. You want to be like that. You're taking in observations from both sides, right? You're formulating a hypothesis, but you're not losing focus of the end of that run, right? At the end of that tennis match, or in this case, the end of your retirement and financial independence. Use it as an education, but don't let it sway you, right? The world's coming to an end. We have black swan events coming down, right? You're going to hear a lot of that. Sells lots of newsletters, gets lots of people on CNBC all pumped up, right? Does it truly benefit you in the end? The only thing that's been proven through multiple Nobel Prizes that have shaped financial theory, that has taught us many different things, Markowitz, A lot of Gene Fama, who's one of the chiefs of DFA, which is a fund family I use a lot in client accounts. He basically says, diversification is the single best thing you can do for your portfolio. I don't care if it's real estate, bonds, ETFs, Forex, right? Futures, gold, commodities, silver, maybe a little bit of crypto, just a teeny bit, right? Until it gets more accepted. That's the best way to run a portfolio. But the vast majority of people that wind up blowing accounts up, they've taken all of their money. In many cases, they cannot afford to lose it, and they've put it into one thing. We saw that a lot with this Wall Street Bets crowd, right? They took a lot of their money and they put it into GameStop or whatever the hell the equity was du jour of the day, right? That is not investing long term. If you meet any seriously wealthy people, right? And I am an absolute pipsqueak compared to some of my top clients. They have taken an absolute laser focus. They've gotten educated along the way, but they've been diversified. And that's the key. Equities, real estate, Forex, right? Bonds, whatever type of bonds, ETFs, the diversification can be broadened out in areas like having, multiple restaurants or businesses that you have, right? But be diversified in the end game is going to give you a much better chance, because sometimes some things are going to do poor, right? So let's narrow that down for just the Forex discussion, right? Maybe variables fantastic for a year and takes a quarter off. Maybe Arrow continues to kill it and it needs to be part of your portfolio. Maybe Gearbox, Stratamus, and Neo really begin to do tremendously well with consistency. Remember, I'm always talking about consistency, but you don't have to worry as much about consistency if you have a broad bench. Just look at an NFL team, right? I'm not a Tom Brady fan. I'm not a hater, but the guy is an absolute winner. Love him or hate him. Oh, I got to tell you, those drunk videos of him in Tampa Bay are pretty hilarious. But love him or hate the guy, he has been one of the most laser focused people that I've seen the last 50, 60 years in professional sports, right? And he surrounds himself with a deep bench of talent. Just think of yourself in that same context when it comes to investing. Now I'll get off the ball pult and shut up. So I am a dollar bear going forward until we hit some of these big levels on the monthly chart. Okay. So we ultimately, I think we're headed, as I've talked ad nauseum about, to the 85 area. Once we get to this area and spend some time basing if in fact that's true, remember, I could be dead wrong, right? So you always got to look to see what your hypothesis' opposite is if you're wrong, right? I think we should spend a couple of months here and then begin to do a little bit of a counter trend rally. Again, I could be wrong. That's just my thought. But that's DXY, which answers one of the questions I have. So let's go through, and then I'm going to answer some of these questions here. I see them starting to build up here. So the other question I always hear, and this just to dovetail into the end of the previous discussion, what account size should I set up? Okay. So let's take an example of a typical client and our typical investor. Let's just say they have 100 grand. Let's just start easier there, probably. If I was your financial advisor and you had 100 grand, first question I would really have a drill down on with you is, of this 100 grand, what can you afford to lose? I can afford to lose it all. Well, really, can you? And then you do a little deeper dive, do some personal thought, right? Can you really afford to lose? Well, I can afford to lose maybe 15 grand of it. Okay, then put that amount in Forex. It's because you stand a greater chance of, with just one product and not a lot of education, you're kind of half-assing it. You're not watching my stuff. You're not paying attention to Tyler's stuff or Dasan or Killian's or any of our developers' presentations. You just stand a greater chance of having a loss in this area, right? Whereas if you put it into a bond fund or a money market, you're not going to have much return, but you'll get your 1.5 to 2% a year out of it, depending on the duration of the bonds in the fund, right? So You want to, and then I would probably tell you to put the other 85 grand somewhere else. What's the goal? Everybody has three goals in life financially. You can have all three, you can have just one, but essentially it's income, it's legacy, children, charity, or it's accumulation or growth. You have one of three goals. Okay. Nobody has anything outside of that. You may have an amalgamation of all three goals, but you have one of those goals. If the goal is accumulation or growth, which is what most people's goal, or at least until they retire and it becomes income and or legacy, right? Then you should be in a majority of your portfolio in higher growth products, maybe 70% a mix of equities with maybe about 10% of that to 15 or 20% of that in Forex, right? Now, a lot of people listening to me be like, Steve, I don't have 100 grand. I don't, that's fine. But I want you to picture yourself having 100 grand, right? And this is right out of Michael Jordan and Tom Brady's playbook and a whole bunch of other superstars. They always envisioned themselves how they would be if they had that type of account, or if they had that type of talent, or the team had that kind of success. So all Jordan would do in the very early days at NC State was sit on the bench and picture himself making free throws. And his percentages, and this has actually been proven, these percentages of people that actually genuinely thought a lot about that were just as powerful as if you stood at the free throw line and shot 1,000 baskets. So when it comes to investing, if you're picking a goal, make sure it's something that's attainable, it's measurable, that's obviously a lofty goal, right? But just picture yourself as having that goal of a certain number, right? And what you would do, what do you think you did to get to that point, right? This is all sort of Grant Cardone 10X stuff, and then, sort of 10X all those activities along the way, right? But, nothing groundbreaking on my presentation here. It's just have a focus, set particular steps along the way to the goal. Make sure you have that diversification going down that path, right? But I feel like because like most of the questions I get is how much should I put in the account? I don't know your financial situation. So you really need to look at yourself in the mirror or talk to your spouse or whatever the particular situation is and basically say, how much can I afford to lose? If that number is $2,500 out of a $25,000 portfolio, that's what you put in a Forex account. Once you do better or have more capital to invest, right? And if anything, what this should do for most people, quite frankly, this is my thinking would be, I'd be pissed, right? I'd be like, yeah, man, I can only put $2,500 in the account. I'm mad, go out and get more, right? Get focused, do a better, whatever, get a better job, get a raise, promotion, whatever the case may be. So, but that way you're sort of like, I need to get more in this account, right? Then you can begin to diversify in other products. So I would have, at some point, I hope all subscribers have 5 licenses, right? And they're diversified across all the different software because it's just, some's going to do better than others. Some aren't going to do well. Some will go into drawdown, all that stuff. So, but let me just take a quick break here and make sure I don't get too lost in the questions. Bitcoin, you had a big pop on that question. You had a big pop on it because you guys probably didn't know Elon Musk and Tesla put $1.5 billion into it, probably at much lower levels. And then they just came out with that. Why? What were they doing? They're talking up their book. Don't fall for it. I would not be a buyer here. I'd want to wait for a pullback. Where the pullbacks are going to happen, I don't know, right? I mean, it is dice roll with this stuff. So, and please don't pay attention to all the baloney out there where Johnny took 10 grand, right? And he put it in Bitcoin at $4,000 a coin, which was back during the beginning of last summer. Let's take a look at the coinage here. Yeah, by the way, this is a monthly chart on Bitcoin. You sure you want to be a buyer up here? Pretty bananas, huh? Looks a little more palatable on a weekly level, but still total nosebleed stuff. And then if you look at it on a daily chart, right? Your level of support right here on the coinage is at 39,669. I wouldn't even touch this unless it hit 30. If it breaks below this, we're going all the way down to probably 20. Then you may consider being a buyer. Yes, it's very far away. It may never get there. I could be dead wrong. I don't care. It's risk management. By the way, everybody say a prayer for my daughter, Ava. Name of Father, Son, Holy Spirit. This is her first day of driving instruction with the instruction school here in California. So hopefully she doesn't crash my BMW into the parking lot wall. So do you think the movement of money into Bitcoin, I think the movement of money into Bitcoin is helping depress the US dollar? That's actually a good question, Robert asked. I don't know the answer to that. From the standpoint of draining liquidity from one asset to another, it's possible. But keep in mind, a lot of institutions, the majority, I should say, of institutions globally, whether it's mutual funds, ETF companies, or an amalgamation of both, like a BlackRock or a Vanguard, Fidelities, or some of the biggest in the world, Barclays. A lot of these institutions have adopted crypto at all. Some have. So, I mean, there really hasn't been a broad institutional participation into crypto, right? It's mostly all been retail driven, and a couple of superstars underneath the covers. So I don't know that much is drained out of Forex, but there probably certainly has been some, I'm not sure how to measure it, that's been drained out of the other markets. All right. Ideal count size for Einstein. Norman, I'm just not an Einstein fan right now. Sorry. We need more protections put in place. I've seen way too many accounts being blown out on Einstein. Although I must say, O'Neill's done an excellent job captaining that group. He is an exceptional trader. He's one of our big leaders at this company. He has his own Telegram channel as well. It's in that list that I posted. You guys can check it out. Hello, I'm kind of new and using Variable. Good to hear. Remember, Variable's not the only one out there. There's lots of other greats as well. So if you can bring in some people, build your organization, get your license for free, you can go get another license. I see the post on which pairs to us using this week, but there are for 5 and 3K accounts. Is there a post for Auvorians with accounts with 1K? So I know that Dasan, in his first video, if I'm not mistaken, you guys have in that master list that I posted, Dasan's channel, his Vimo channel's in there. Go to his first video, I think. Maybe somebody can help me on that. I think he talks about accounts of all sizes, if I'm not mistaken. The only reason he chose 5 and 3K accounts is that ideally, now maybe with the exception of Arrow, but in some of the other ones we have coming up, ideally you want $1,000 account or bigger. You're in much better position if you have a $3,000 account. Just gives you more of a casting a wider net and all that. So hang on one second. We good to go? Man, you always want to make sure your kid's driving instructor's not like some washed up drunk, right? In any case, what do you think about AUD JPY? Let's take a look at that because I haven't really gotten into the pairs yet. AUD JPY. Let's take a look at that. Let's take a quick peek here first. I mean, I'll just brush through this real quick because there's really not a lot going on. We're all within the ranges of most of this stuff, with the exception. So this is the Euro daily chart. You can see we're in a range, bouncing between it. Notice the 50-day on the upside is holding it just like the 50-day on the upside of DXY. See that right here? Holding it both sides. Now, as I had talked about the last couple of weeks, we've had an expansion, which I was expecting to see, GBP USD. So just note that this line could continue. See how it's sort of like a, let me drop it down here. See how this line has a sort of a lighter color? And it's probably hard to see, but it means that it could be in expansion mode for a lift Couple of dojis though, but I think a lot of this is just Brexit related. People gaining more faith in the UK's ability to stand on their own, which I sort of applaud them for. Let's take a look at that AED before I forget. Remember, as I talked about always with these currencies, especially if they're in the crosses or they're minors and they're not the majors, I always start off with the analysis of the USD related to one of those majors before I look at the cross. Okay. AUD JPY is a great example of this. I don't follow these a lot, so it's too much to pay attention to. But if you look at the daily chart on the Aussie, Aussie yen, we have to reset the scale. So it looks like it's in potential lift mode as well as like this was the kind of like had that GPA or the GBP view right here. Got to go back to the weekly on this stuff to look for sort of points. I mean, this is probably it right here. Coming full circle back to, I would say probably the 83.40-ish area would be my argument. I mean, that's quite a ways away. It's not necessarily a straight line shot up there, but that's, it's not difficult to see that if you're looking at the weekly chart. Each one of these candles represents a whole week, so you get a much bigger view backwards. Hopefully that makes sense. Don't think it's going to be in a straight line. All right, so let me just peel through this here. Yeah, no, when you have in the question that was asked is, Gearbox has got this particular gentleman in shorts as it's lifting. And let me just drop back to the daily chart here. When you don't have a lot of sort of tight basing, inside of a tight range, kind of like we're seeing in the dollar euro at this point, you have a much higher propensity for the markets to either continue to lift up or to continue to grind up, like we're starting to see in pound dollar, right? And that's really not, in my opinion, where I want a cost averaging software starting to build a sequence of trades in my account that are trying to lower the price down by fighting that freight train you guys always hear me talk about, right? I probably, if it was a MAV version of the software where I have to accept the trades like a lot of US residents, I probably would not be accepting trades short at this point, because we have sort of no, we have almost $2 full that can lift on this thing before we hit the next area of resistance. To me, and it certainly could zipper up to that area too, right? So, I mean, it could absolutely just tear up to that area. I just don't know. So if I don't know and I'm not comfortable, then we're in some sort of decent technical analysis base pattern, which you guys hear me talk a lot about because I love, cost averaging and any kind of martingale strategy works great when you have, an upper resistance line and a lower support line in anything, right? Stocks, commodities, Forex, and you're bouncing between these two lines inside of a tight range. I'm okay with accepting, like all the trades that come across from any kind of software, right? But as soon as we start breaking out above a line of resistance or breaking out below a line of support, I'm less willing to take that trade. Win rates are just lower. And win rates with everything with me because it's all risk management. So let's take a look also at Euro JPY. I think this is important. Still stuck inside the range. Euro GBP. Now, obviously, with the strength in, let me just back up here 1 second to the weekly. So I think short-term support, this is on a weekly chart, probably falls down in this area. But I mean, no surprise with the strength in the pound that we're seeing this. So this probably corresponds to that level of resistance on the opposite side. See the same thing for GBP, which always gets kind of confusing because, you almost wish it would be GBP euro in this one, right? So just reversed. So you can compare it to, everything else, but you just have to reverse it because the currency comes second. So let's see what else. GBP NZD, our favorite crazy nutcase here. NZD USD, again, daily chart I'm showing here. This one's in a tight range. AUD CAD, again, still in that tight range, just daily chart. USD CAD, okay. This almost looks like the dollar index chart, right? Where we got rejected from the 50 SMA line. Now we're back down in a tighter range with the edge of the cliff here at the 2630 area. All right, let me, the Q&A, I can only see myself, Sharon. The Q&A cannot be seen by the whole group. I just try and read the questions. Let me just see. Make sure you guys post your questions inside the, yeah, here, Norman, let me show you. It is, let's see if we can get this answered. I know that it's posted in here. So there's a Telegram channel, if I'm not mistaken, because I know there's a weekly broadcast. I haven't put that much effort into it. I would say hunt around for it because I'm pretty sure O'Neill has a Telegram channel. I don't subscribe to it for Einstein Alexander stuff. Probably should be in this list. Don't see it. Sorry. Euro AUD. Let's take a look at that. Another one I don't have on my list. You can only have so many crosses. Wait, how come it didn't pop up? All right, daily chart on Euro AUD. Again, weakness in Euro, strength in Aussie. Man, we're on the ledge here. See if I can get this brought into focus. We are right on the edge. I mean, it is no man's land under here in the daily, so we got to move to weekly for our next area of, and it's unclear. What is clear is down here, but that's far away. This whole 5,400 area, that is some serious support, which could very well be the next stop if we continue weakness in the euro. This is a great example of always want to look at, Aussie US dollar and then, euro US dollar, and then move to this as sort of your third or your tertiary level of analysis, even though this was your main currency of interest, as you'll begin to see what's changing in other currencies before you get to this one. Sort of a roundabout way, but I like to call this pin action. Any of this stuff's confusing because I don't touch on this every week. Let me actually just put this in the list up here. We'll keep it in the list. Probably should have been up there beginning. I must have deleted it. All right, cool. All right, let me just go through these questions real quickly. Yeah, I know. Thank you, Ann. Yeah, let's face it. Who really wants to look at my ugly face in a damn camera, right? But at least I could be all crazy Italian and animated, right? So we can crack some jokes. Yeah, let's see. Still can't find my channel for Telegram. So it's right here. See me highlighting this? So for those that joined us late, one thing that kind of stinks about zoom as many times you can't see posts that I posted earlier. Seems kind of ridiculous. Let me just repost this again. So this is the master list. Keep it on your nightstand, right? Because everybody's always asking about this. Looks like we need to make some adjustments to this. So I'll see if I can reach out to the Stefan guy and see if I can get him to build in a few different things here. But I do love the master list. This is great. Even has a rewards plan, how to connect with us, right? All right, what else? Gold analysis for the week ahead. Boy, you know, I'll tell you, I've got this one client. Guy's got like $1 million in GLD, and I can't seem to talk him down off this because he's just going to get absolutely clobbered if this thing corrects. This is a weekly chart on gold. Let's just look at the daily first. Let me reset the price scale. Let's just get a feel for where gold's come. You know, obviously, as the dollar gets weaker, typically precious metals, palladium, gold, silver, platinum will increase in value, but this chart is just becoming increasingly murky for me, right? And when we know the line in the sand is basically the 1680 area, so if you look at the actual price of gold in the spot price of gold in US dollars here, same chart obviously as the GLD, which is the ETF for this. But you know, I would think our line in the sand is pretty much right here, you know, right at 1800. Notice every time we've come down to this area, it has held. And even though it's poked its head through, and, you know, a lot of times this is a great example of what's called a shakeout. You know, this line wasn't at this point for this 200-day line, wasn't at this point when this dip happened. It was probably lower, like down here. So it held, but a lot of times it'll go below the line and it'll shake all the weak hands out, and then it'll rally right back. So I usually will tell people, especially when it comes to commodities, usually want to give them a couple of days below an important line before the selling starts to exacerbate below. This was a head fake. Went higher, but we have now 1, 2, 3, arguably 4, and then a bunch of other fractals, which are the tops of these groups of candles. We have 4 lower highs now, and we are coming up against crosses in these, at least on the daily. I just don't like how this chart's looking. Now, from the standpoint of somebody that wants to be a buyer in gold, you know, most of the rally, in my opinion, was to be had in this whole area off the bottom of the market. So let's just look at the weekly chart because it's less murky. You know, the real money to be made, in my opinion, was the bounce off of this area during the pandemic. So we had already been lifting in gold. You know, obviously this was still due to, you know, still continuing devalue of the US dollar, not to the degree we've seen since this point. But, you know, we bounced off a long-term line. This was the buy right here. So this is when me and this one client who just chooses to have huge chunks of his net worth, again, risk management, right? But he just won't have it. He's a crazy Palestinian guy. I can't convince otherwise. And it's not really a big deal because he's got another 10 million in real estate. So it's a blip, but he thinks gold's going to the moon. So we bought here, guy's done well. We peeled some off. It's peeled about a $500,000 off at this point. And now I'm trying to get him to peel some more if this breaks. But I'd be a buyer down here. Wouldn't be a buyer up here. All right. What else do we have? We'll have Stefan add the Alexander and Einstein channel to the Zendesk list. I just got that note. Thank you for, because I will forget to ask that question. Make sure I get everything covered here. I'll type in the lists, get that in there. bookmark it. For those that use Firefox, which is what this is, Windows 10 Pro, you can always just click the star, right? And I always save everything to, whatever. I have a bazillion bookmarks, as you guys know, for all my businesses and trading companies and all kinds of crazy stuff. But, it's always good to bookmark this stuff because you can just find it, so forth. All right, what else? What is the name of the indicator you are using? You talking about the Trading View, the software itself, tradingview.com? Is that your question? I have a couple other pieces of software on the other PC on the other side of the office. But this is just tradingview.com. It's actually really good software. I think for $20 a month, you're getting stuff that's almost Bloomberg level quality, and you're saving yourself $1,800 a month. Oh yeah, this is the squeeze zone. Okay, this is Dassan's indicator right here. You can overlay this on any chart. It's actually very good. These are dynamic support and resistance levels that move around, and obviously in many cases they're very short term unless you're looking at them like you are here on a weekly chart or even monthly. Remember the indicators, moving averages, candle patterns, support and resistance, any kind of like sort of big time Fibonacci carry considerably more weight on a monthly chart over multi-years on any asset that could be traded. And here we're looking at just the long term of gold. Remember, gold spent the vast majority of its life, as most people won't tell you, in the doldrums. So as when you're looking here from damn near, and this is when we came off of, in the early days, we came off of what's called the Bretton Woods standard, which is the gold standard in the early 70s. And then gold started in the US dollar, which had really no backing, started trading on its own. But, we spent, 84 through, maybe a little early, like 83 through January of 05, really in no performance in gold. Think about that. That's like 20 years of no returns, unless you bought the bottom or sold the top. And, going short this type of thing was a little more difficult back in this period of time, where now you can just do it with inverse ETFs or, trade in the futures markets on it, or even trade in spot for that matter. But now, it came back up to its level long term. There's a lot of people globally to believe in this, and I think it should be part of a portfolio. I just would not be in heavy in it right now. Now, when things truly start to fall apart and we have some sort of global meltdown and the music's turned off and there's a small amount of chairs to sit on, which is coming at some point, then you want to be in gold. It may be a little too late at that point, but I like this as a store of value much lower than where it currently is. And you can see we've spent a lot of time where investors have had no performance in gold, but they want to keep that as that sort of store of value. And a guy I met the other day has got almost $250,000 in gold bullion in his safe. And, he chooses to have that as his store of value in his particular case. But the squeeze zone indicator is what it's called. Let's see what else. I want accumulation and growth for the long haul. You're right when it says having a diverse portfolio is a key. I love Auvoria Prime. Good. Great to hear. You are welcome. All right, cool. If that's it, now I have to go out and ask my wife, April, if my daughter's totaled our car yet. Now we have faith. So, yeah, I'll tell you guys a funny story. God rest my parents' soul, but my parents always had 3 cars when we were kids, and I had a couple of motorcycles, and I raced go-karts and stuff around. I was like basically a big motorhead, and unbeknownst to my parents, and if there's any kids listening to this, this is not something I would recommend, but I think it's a funny story. So when I was a kid, I was 14. I was still pretty tall, just under 6 feet. And for a 14-year-old being damn near 6 feet, I was pretty tall. My parents always had like an extra car sitting around an Oldsmobile. So at like 14 and a half, I took the keys out and I learned how to drive the car around this big neighborhood we lived in. And I would take it up to like the water tower, down to the mall parking lot, doing like 3-point turns and stuff. And my parents would come home. They would never check mileage or gas tanks. And I always washed all the cars for the family because I got like raging OCD with vehicles. And it was always in perfect shape. And then when I turned 16 and got my permit in Pennsylvania, this was a while ago, my dad's like, all right, well, here's like, and they had this real skinny driveway to back out of their house with like tons of tall trees. It was like just real tight and it's a long driveway. And, and my dad's like, all right, now you put this in gear. And I'm already like completely backing out of the driveway, turning up the street. He's like, oh, you got the hang of this pretty quick. It never caught on to him. It was funny. Anyway, I'll have you guys have a good week. I will be back Tuesday, 10 a.m. Pacific time for the midweek strategy. Everybody have a great week. Be safe.